Well, it's not just banks that we're watching. President Trump slamming the Fed chair Jay Powell. Yet again, the president tweeting over the weekend, quote, "If the Fed had done its job properly, which it has not, the stock market would have been up 5,000 to 10,000 additional points, and GDP would have been well over 4% instead of 3% with almost no inflation. Quantitative tightening was a killer, should have done the exact opposite." Joining us now to discuss is Yahoo Finance's Rick Newman. Rick, what's your take on the renewed Fed bashing from President Trump?
Good thing he's not running the Fed. So basically he's saying that we should have quantitative easing when the economy is strong. I mean, no central banker goes along with that. So 5,000 to 10,000 points, I guess he's talking about the Dow. That would get us close to Dow 36,000 or something like that, which Kevin Hassett, one of his economists, predicted it back in 2000. So they're still aiming for some kind of stratospheric high in the markets. I mean, to be serious, I'm being silly in my answer, but to be a bit more serious, remember around a year ago in actually of January of 2018, markets peaked and then started to fall. We had close to a bear market then because of concerns about inflation. That's why the Fed raises interest rates to keep inflation at bay and to make sure we don't have inflation. Markets do not like to see inflation, and that would spook markets. So, look, interest rates are only at 2.5% or so. That is way below historical norms, and most people watching the Fed say they're pretty much getting it right.
Wait, but Rick, why do you think he's tweeting this now, given that the Fed has taken a step back? They are much more dovish than they were at the end of last year. Why now?
I think because he actually wants interest rate cuts. So if you just look at what the forecasts are for 2020 and you look at what it takes for a president to get reelected with what is basically a minus 10 or minus 15% a point net approval rating. So that's where Trump stands. It's a good reason to think he will stand there in 2020. You need at least 2% growth to get reelected based on models of the past, going back to 1948. He might barely just get 2%. He might get 1.5%. So it's going to be right at the edge in terms of is the economy going to be strong enough, according to traditional models, for Trump to get reelected in 2020. And one of the things that will goose the economy is if the Fed cuts interest rates. So I think he's pushing hard for an interest rate cut. And there's a lag here, by the way. So, by the time between when you cut rates and when it actually does stimulate the economy, 6 months or so. So he wants a few interest rate cuts between now and a year from now, say.
And we've seen him trying to push for his own appointments to the Fed as well.
Yeah,
so
trying to stack the deck a little.
Throw politics into it.
Trying to keep the pressure on, I think.
Exactly.
Yeah,
trying to throw politics back towards the Fed, which a lot of people don't want to see. But speaking politics,